Studio by Ian Williams, CEO at Charteris. As John was just saying, the impact still has to be felt, and it can only be felt with a lag. So they're not quite sure if quantitative easing is working.
No, well, if you look at, say, the effect on the gilt market, there was a lot of comment when it was first announced that it would drive 10-year gilts down to 2.5% yields, which never happened. I mean, if you look at a chart, the gilt, 10-year gilt, since quantitative easing was announced in March through to now, it's virtually flat. I mean, it's had no impact on the price level in the gilt market at all. Whether it's had impact on other parts of the economy, I mean, since quantitative easing was issued, the equity market is up 50%. Gilts haven't gone anywhere.
Well, it certainly had some impact on the current account situation. It seems like we're moving back into positive numbers within maybe the next 1.5 years. The latest numbers yesterday were quite positive. But in terms of what it has done to the pound, of course. But going forward, do you think there's some potential that we might see even more quantitative easing? As in, would they extend the 200 billion, expand it?
If you look at the outlook for the gilt market, the outlook for the equity market, everything really is predicated on the strength or relative weakness of the UK economy. And our thoughts on that are that the UK economy will be weaker than expected. And that view seems to be shared by several members of the Monetary Policy Committee. Now, bear in mind, you've also got an election coming up next May, probably. So you're going to have a situation where everything is poised towards further easing. The problem is that you've had 200 billion, and if you believe the latest figures, the economy is still more or less in recession. So it hasn't produced a rip-roaring recovery. The question mark, which no one really knows the answer to, is whether it stopped a much deeper recession from occurring.
Well, the latest GDP figures, or let's say the second revision of the GDP figures for the third quarter, caused a bit of a disappointment. What do you think will happen next? Because there was also been some talk about the remuneration rate being cut, like they've been doing it in Sweden. So what do you think is more likely what happens next?
We've said for a long time that we wouldn't rule out Swedish-style negative interest rates, because what's happened, they pumped 200 billion into one end of the banking system and absolutely nothing's popped out at the other end. So you could argue, what's the point in doing another 25 billion or another 50 billion? Because the real challenge now seems to be, how do you get the banks lending to small and medium-sized companies? It's not such a problem for the big companies because they can tap the corporate bond market. Well, the small, medium-sized, that's a route that's open to small and medium-sized. They need bank finance, and if the banks aren't lending them money, so it could be that having done 200 billion, they now move on. And how do we get this existing 200 billion that's gone into the banking system, how do we get that start to get on lent into the wider economy?
Since you mentioned the election, people have been talking about March or maybe mid next year, so to give Gordon Brown a bit more time. When do you think the Bank of England will have to nail it down? Because they can't do it right before election day. Would it have to happen when? February?
Well, yeah, I mean, we think the election is going to be on May the 6th, which is the date of the 4-year term of the county council elections. And the reason we think that is that the Labour Party, it doesn't really have the finances to fight two major election campaigns with a few weeks of each other. We don't think he's going to go early. We think he'll go almost to the wire. He's not going to go in June because they've got the county council elections on 4-year terms. So we think the whole lot will be done on May the 6th. So if that's correct, and May the 6th is the date of the next election, then any requests from the Bank of England into the Chancellor of the Exchequer for more easing of any form, whether it's negative style rates or more quantitative easing or whatever, will probably find a welcome mat is laid out for them.
Very quick last word, 10 seconds. When will the bank rate rise again?
We don't think rates are going to... Well, we actually think there's a possibility there may even be further cuts in UK rates. So we don't see any rise in rates until 2011.
Okay, all right. Last words of Ian Williams from Charteris for 2009.